One of the things that Mike and I were talking about last September is that everybody hated value. Nobody wanted to own value stocks. At the time, getting emails from clients because we own Procter & Gamble was like, why you own Procter & Gamble? It's a dog. We need to go buy more Google, whatever. And we're like, hey, just be patient. You have to be careful with these market rotations because we all kind of get on one side of the trade when things are working and we tend to chase assets. And right now, we're chasing every asset class higher. It doesn't really matter what it is. We're just throwing money at it because it's going up. You have to be careful of that because eventually you're going to get a rotation. And so from an investment management standpoint, you want to look for things that nobody else wants. What are the things that everybody hates? Because that's where money's going to go to next. As we've said before on the show, it's the old Wayne Gretzky. Think about where the puck's going to go, not where it's already been. As investors, the mistake we always make is we're always chasing where dollars have already gone to. And we're kind of getting involved in that herd mentality. So from a contrarian investment standpoint, to be a better investor, look where money's coming out of, because that's where eventually money's going to wind back up. And so last September, we were making that case for value. Since then, value has come storming back. We've had just a very, very large rally in value stocks. The value indexes are at some of their most extreme overbought positions that they've been in quite some time on a monthly basis. That's been a big reversal from where they were just a few months ago. It's been a very, very sharp move in value. But it's interesting when we talk about value, we tend to lump stocks into categories. So for instance, we say, give me 5 value stocks. People are going to start throwing out names like Walmart or Costco or Procter & Gamble or Coca-Cola. This is what we call perceived value. These are the buckets that these stocks tend to fall into. They tend to fall into that value bucket. Stocks like Google, Apple, Amazon, they tend to fall into the growth bucket. So we have growth, we have value, and we tend to just kind of arbitrarily assign groups of stocks into these value sectors because historically that's what they were. But the question today is value, the way we've generally thought about it, still value or not?
They're not the same things. Small cap is small, large is large. They are kind of opposites, but growth and value are not necessarily the same things, but everyone feels that they are. And I think it's value only in name, in what we perceive as value. Give me all the value stocks, and they're going to give you the Walmarts and Cokes and Pepsis of the world. The problem is they're not value. If you look at their traditional metrics, price to earnings, they're very high. Walmart has a PE of 45. Costco's over 50. So they're not value. What matters? You're buying what it will produce in the future. And that's a very different story when you're looking at quote unquote value stocks versus growth stocks.
Catch me daily on The Real Investment Show. The link is in the description.